The dog days of August are coming to an end today, at least for the financial markets. Pretty good month. Start the day out in the red, but come on, who you fooling? You know what's going to happen. The buy the dippers are going to come in, get us back up in the 6,500 handle. Culprits, Dell, Marvell, Affirm, buy now, pay later. Bull not doing much. Celsius gets a little boost from Pepsi. Tim Quast, 805. We got to get things started on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, little bit of weakness here, down 21 handles, 64.96. The buck up a tad, but just kind of quiet, trying to clear 98. TLT in the red, just not really going anywhere, 38 cents. USO flat, GLD down a stick, 313.99. Silver down more on a percentage basis at 35.27. And Bitcoin, even though some people say it's going to $1 million, it's down $2,000 at 111,000. Let's bring Dennis in here.
Who said it's going to $1 million?
Eric Trump.
Oh, yeah, I did see that, actually.
Yeah.
The Trumpster. The Trumpster Jr.
Yeah. Okay. All right, Alex, thank you. My intros get better every day.
I mean, if hyperinflation comes, maybe it's the case. Maybe this is the where to go. Maybe this is it. Hyperinflation, buddy. This is 2026. So, yeah, Bitcoin, probably not a bad thing to be in. I don't know about $1 million, but 200,000 looks nice. I'm hodling.
I got
the Bitcoin. I think I like Bitcoin going forward for the simple reason, inflation.
Mm-hmm. And we'll
right now, it kind of trades like a NASDAQ stock, but I think when it starts, separating here, like look at gold. We're going off the rails here a little bit, but gold is perking up here. Gold's starting to look perky. Up near the highs, looks like it's ready to break out. It makes perfect sense because gold is anticipating that, hey, we may get some inflation coming here. We got tariffs, which are inflationary, coupled with a Fed that is going to be ridiculously dovish going forward. We're going to get not just one rate, two rate. We're going to cut rates. We're going to get them so low. We're going to have the lowest rates in the whole year. It'll just be great. It'll be great until inflation comes and takes away all our purchasing power. But you know what? They'll just lie to us about those numbers anyways. So the average bear will feel okay, even though they're not.
PCE at 8:30, so we'll get some inflation data.
If it's hot and dips on it, it goes up anyways because hey, the Fed's cutting no matter what. Maybe they'll cut in September. Maybe it's like it'll be Powell's last stand, but we know what's coming. A lot of rate cuts are coming. Lots of them. Lots.
All right. What advantage of being in the STN room is you get Dennis's like final thoughts. Watching the stocks up to 5 o'clock. Of course, he's pounding on the keyboard till 8 and sometimes even later. But we had some weakness in some big stocks here, Dennis. And how did you feel about the market at 8 o'clock last night when you?
Well, I mean, it was absolutely ridiculous, really, that the S&Ps refused to go down. We get news, and the Brentster, come on out here, say hi. You're always hiding in the background. Everybody likes to see what you're wearing, how you're doing, what's going on, how you're preparing for the long weekend.
Good morning, everyone. Good morning, Triple D. Good morning, Joel.
Did you ask me permission to wear a sweater?
Look at the look. You don't like your sweater.
Oh no, I like the sweater. Don't break out a sweater now.
It's better
August. It's 49, but you can't wear a sweater. You got to save your clothes because you start putting that stuff on too early.
Dude.
And when it gets really cold.
Do you know what the temperature is here outside right now, Georgian Bay?
It's like 60.
45.
It's like 80.
Closer. 45 is closer. It is.
Oh my gosh.
Right now, outside, I'm going to get the exact temperature, but it is cold. Like I stepped outside and I'm like, woo, sweater weather. It is 52 degrees, 52. It's a little frigid out there. And you know what happens in Georgian Bay on the calendar turn? The temperatures just go, it's the end of summer. How did the summer end this fast? Why?
Summer
Why
is cruel.
is it so fast? I still tell you, when Canada gets taken over to become the 51st state, the only blessing for us Canadians be able to go to Florida and don't have to get any visas. So I just got to move to Florida because it's nice and warm down there. It's so cold. Yeah, cold.
So we see how the weather is with Tim Quast?
Meredith says hot. Meredith, I'm coming to see you in Florida. It's too cold up here. It's August and it's 52 degrees. What's going on? And what's that mean for December and January and February if it's 52? Buy your natural gas because you know what? That heating bill is going to go up and the UNG's on the lows. Don't buy UNG. UNG's the worst vehicle to buy.
All right, we got Tim early. He's got some good topics. Let's bring him.
Is he here already?
Yes.
I've been downgraded to special guest. I see.
Downgraded. It's special.
I'm kind of blue. Let me see if I can fix that.
Yeah,
hang on one second.
You're so blue. There you go.
That's a little better. Yeah.
What is the temperature out in Colorado? Is the question.
Actually, it's very pleasant here. I'm in Denver today. We came down yesterday.
You're right you're on the mountains.
But Dennis, coming over Rabbit Pass out of Steamboat Springs at about 5:30 yesterday morning, 40 degrees. So, yeah, winter's coming.
Winter's coming. Get your skis ready. Shine those things up. Get them all ready to go.
I need to because they took a thrashing last year. You know, if you're good, they don't take a thrashing. You know, so
Did hit some rocks.
I loathe rocks. Yes,
that's not fun.
And winter could come to the market too. You know, at some point.
Ooh, look at the segue. I like this segue from weather to stocks. Okay, so winter's potentially coming from the market.
It could be a bad day today. I'm not saying it's going to be. You know, it's by anyone who tries to predict what the market will do will have his or her or theirs proverbial behind-handed to them, right? So
we're not in the prediction business. We're in the exploit inefficiencies business here. Right. That's what we all are as traders, finding the little inefficiencies here, bring up market structure edge, because that can find some inefficiencies for us here, Tim, if you don't mind, if you have it there.
Yeah. Let me do that. Okay. No, I don't want to leave the studio. That's not what I want to do. Now I've got to figure out what to do.
They lost all the words on the present. So StreamYard a month ago went and said we go full symbols now because it's universal and you don't need language. So we don't have English on there anymore. StreamYard got rid of the English.
So if I were a monkey, I would have just figured that out immediately. But as a human being,
because we automatically look for the English words, we don't look for these symbols. So I know I struggled with it too. Every time I check out from the grocery store, I don't have no idea how to do it because they don't have words anymore. They just have symbols. It's like shows you a little picture of a MasterCard. I was like, I guess that's how I pay.
Exactly.
You got to figure it out. Yeah, it's all pictures. Hieroglyphs. Yes, that's correct.
Exactly. Well, so we could start out. I just happen to have NVIDIA up because. So I did this CNBC segment in the on Worldwide Exchange, which is the middle of the night. You know, for me, it's the middle of the night. Frank Holland. and I said, well, you know, if you looked at NVIDIA it was before NVIDIA reported, I would say, you know, you look here is what you look at. So everybody covered in July at index options expirations. Right. So that's occurring today. Right. It's the opposite today. Right. So these are very important days and people don't pay attention to them. You know, if you backed up to all the way back to 1987, it mattered. You know, in October of 1987, people had figured out how to put in place portfolio insurance with derivatives. And they were figuring out automated trading because the Cincinnati Stock Exchange, as all of you market historians know, was the first all-electronic exchange in 1986. In 1987, at options expirations, the market went haywire, and we had October 19 when it dropped 22%. Right, so derivatives have mattered a long time, but they're much, 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 much bigger today. These were started in 2014 by the CBOE, Chicago Board Options Exchange, to help passives true up their tracking versus the benchmark at the end of each month. They're date certain events, right? They're a European style derivative, which means you can only use them on the day. Okay, so if NVIDIA is 8% of the index, and here they were long NVIDIA, and now all those indexes are short NVIDIA, what might happen? I don't know, but I could say it could be a bad day. And I could look at NVIDIA and say, well, at monthly expirations, which are not date certain, you could use them at any point, people were short NVIDIA. What would happen when NVIDIA reported results? Well, the probability is not a lot of pressure. I could run a model that said it was between 172 and 178, right? So, but it was not going to pop with results. And that's what I asserted on CNBC. I said, look, I don't know. No one knows. I'm just saying that mathematically, and the market is mathematical. It's 100% electronic, 99% algorithmic. The reason the indexes change in tenths of pennies is because machines run the market, right? They calculate probabilities. So you look at that and say, because you say, well, their data center revenues were a little light. Well, what's wrong with that thesis? The thesis supposes that money sets prices. It's erroneous. It's
the machines that set prices.
Machines and bets that make the determination. And the bet predated earnings. So you could look at it and say, well, NVIDIA is not going to pop with results. And today it could take the market down. I'm not saying it's gonna. I'm just saying it's the opposite of what it was at the end of July. And there's a holiday Monday, right? So if you're gonna true up your tracking and you're way overweight equities, which everybody is in these models, it could happen here. And then it could cascade. I'm not saying it's gonna. I'm not predicting that. I don't know. I certainly know where broad supply and demand are. And the market has moved wholly on supply. I mean, it's just uncanny.
There is none.
Here's supply. So supply for people who don't know is Reg SHO Rule 201, the modified uptick rule, short volume. It's not short interest. Short volume is a very important metric. Just as with NVIDIA, everybody covered in July. Now, we were looking at NVIDIA right here, but they covered there too. But the big cover came at the early part of July. But here's the interesting thing. If you go from options expirations, quad witching, end of the quarter, June, it was 55% in the S&P 500. It is currently 51. Well, do the math on that. It's 8%. It's an 8% decline. What's the market done since here to here? It is up exactly 8%. Okay, I'm just saying that the entire market's gain has depended on a decline in supply. Well, what if that changes? Right? These are all things to me that traders, you should know, right?
And from observation, Tim, the observation kind of follows what you're saying. The volumes to a certain extent have been kind of muted. It's been this just like slow, steady grind north here. So it kind of makes sense, that everybody's just complacent at this point in time. But what happens if we get a little bit of nervousness? What you're saying is a lot of people just sitting here calm, cool, and collected. But we know what happens. You get one headline, you get something that makes the market nervous, and everybody tries to hit the exit at the same time.
Right.
So we're kind of set up that everybody's just a little bit too long, maybe.
Right. And we don't know what it's going to be. But here's something, of course, I love math. This was also, there's July 31 index options expirations. But we know everybody's long, right? So everybody's long. What's the market going to do? Got it all back right away, right? So we have a one-day reset, and then we get it all back. But here's an interesting thing too, mathematically. See this green part of the graph? When it hits the red line, statistically, the market basically stops rising. If you look at the entire data set, when we're at 6, the market rises 60 basis points. So here it happened right here. So if you do the math between at August 22nd and present, not counting pre-market today, the market is up 56 basis points. I mean, it's so mathematical. It's just unbelievable how much it's mathematical. I'll give you one more. So why didn't the market? I was on right after Steve Leisman on CNBC, who had been called to Worldwide Exchange to report why the market was going to implode on the president's firing of Fed Governor Lisa Cook.
Yeah.
Except it didn't happen.
No.
All right. So why didn't it happen? And why did the market pop right here when Jay Powell said, well, conditions may warrant a shift in our policy stance? Well, because in the large language models, Jay Powell has meaning. There is a big asymmetry to bet on, an expectation he will say something other than what he said before, and it moves the market. In the large language models, there is no Lisa Cook. There's nothing to trade, right?
Yeah.
So it's another indication of how mathematical the market is. And I'm saying this for the sake of the audience. Traders, this is how the market works. And so if you think that it works on fundamentals and rational thought, you will get caught out. You really have to know what the math
Hasn't
is.
worked on rational thought in 50 years.
Right.
It is supply and demand. It's all supply and demand here.
It
So
is.
you think, like, this to sum up what you've been saying here in the broad
Yeah.
market, and then some people want some tickers overall because they
Okay.
get excited
Right.
about individual stocks. But you
Right.
think right now there's a setup here that, the market is too complacent here, and we may get, this calendar turn ugly September?
Well, I think it's not a rational process like that, Dennis. It's that
That's too much thinking.
that is logical, right?
No logic.
It's
You can't use
logical.
logic.
No, I would look at it and say that the indexes are overweight big tech, and they're going to have to true it up. So we already see it manifesting in Nvidia because there was an event, earnings. So will it ripple through everything else? If I look at big tech, I see it, and you could come back to the exact opposite. How about MongoDB? How is it that the entire market moves in tenths of pennies, and then MongoDB goes up $100?
Yeah.
In 2 days, right? Well, what is behind that? I could show you.
Yeah, please.
It's supply again. Pick it. Datadog, Coles, MongoDB, pick Snowflake. They're all supply related, and I will show you.
Let's see that MongoDB.
Here's big tech, by the way. So big tech actually ticked up yesterday and supply ticked down. That's a positive, I suppose, but this is not manifested yet. It turned negative. It's been a long time since big tech was negative. And that hasn't flowed through because it's, there's cause and effect. So we see deterioration in demand and then it manifests in the market. Generally speaking, that's how it works. So let's go to MDB. And you could really see this relationship. The supply-demand relationship. And lately, that's what matters. Look at the price and the supply. They are inverted, right? Inversely correlated. Here's price, jumped. Here's supply, plunged. You can look at any of these. Look at Snowflake, right? It's the importance of understanding supply. It doesn't always work this way. This is an unusual circumstance. Once again, price pops, supply plunges. So what does that tell you? Well, machines had excess supply. Actually, machines probably lost money there. That doesn't happen very often. Does Virtu lose money? Once every 1,289 days. Right?
Pretty consistent system.
Right, exactly.
Sifu knew what he's doing there.
Right? So you always want to know what the supply-demand relationship is. This is what, and when you become too dependent on supply, what's the problem with that? Now we're talking logic. The problem with it is this. That supply is artificial. It's bona fide market making, and they create stock that doesn't exist to fulfill their obligation as bona fide market makers under SEC rules. The SEC requires this, that they buy and sell. They make a two-sided market, a bid and an offer. And they're exempt from short locate rules to do that. But they don't want to own the stock. They want to take a tenth of a penny, put it together. So the market depends on artificial supply with prices created by people or machines who do not want to own it. That's a fascinating thing to think about, but that is the condition in the market. And because there is a relentless inflow of money to ETFs, July alone, top 5 passives got $65 billion to deploy. That's Morningstar data. The actives lost $20 billion, like MFS, T. Rowe Price, American funds. $20 billion of outflows, $65 billion into ETFs. So that leaks into the market and the market goes up 30 basis points. That's what's occurring because machines are taking tenths of a penny. So what would cause that to fail? If the machines didn't do it, it's that simple. So
We
I don't know what
saw the
causes
machines not do it back in 2 flash crashes we had, May 6,
Exactly.
2010 and
Yeah.
August of 2015. The
Exactly.
machine said, we're out. And
Right.
what happened? The market ceased to function.
It
We are
ceased to
so
function.
dependent on high frequency market making systems. Like, that's it. If they say, oh,
Right.
we're not coming and showing up today, there's no buyers and there's no market. Like, you'd
It's-
think institutions don't make markets anymore. People don't. I say to everybody, take liquidity, go midpoints, go off exchange, whatever you got to do. But heaven forbid, don't put your bid out there because it just gets picked off.
Exactly. And look, you and I are not being negative. We're being very pragmatic. Look, we make our living in this market. We run model portfolios. I use them a lot. Focused model portfolios that just tell you, here's what you buy and sell. And a lot of times I do it outside market hours. I do. It's, I'm going to fill a limit order outside market hours. It's pretty easy to do. And I know that I'm probably going to get less adversely selected. The price is unlikely to change as much.
It's slower. I've said
It's
that
slower.
for years. It's
Right.
why I went to after hours trading in 2011.
Oh, wow.
Because the markets trade like it's 1999 after hours. They're slower. They trade off information. It's not just all slop and chop all day. And this is what we've been trying to show in Stock Trader Network, like a different way to do it. And the people who are in there really like it, showing, different ways to trade. Hey, look, humans can actually make a difference after hours. Because during the middle of the day, it's all machines.
Exactly. Yep. And the probability that you will get a worse price when you're buying and selling is very high because the machines are always a step ahead of you, everybody. We're looking at the SIP, the Securities Information Processors tape, right? So we see price. If you're buying real-time data, we all buy real-time data. I just had to complete that form again. You have to do it every year, right? So
me too.
Yep. So you buy data, but you're way behind. They're buying prop data. They're buying proprietary data feeds from the exchanges, from broker dealers. So they're always, 30 milliseconds ahead of you. They know what the demand supply balance is. You do not. And it's why we teach people too. Shift your time horizon. You cannot outcompete Citadel. You could try all that. You will lose. You will lose 100% of the time. But what does Citadel care about? A horizon of a day or less. So if your horizon is a day or more, you now have an advantage. If you know the demand supply balance, you have an advantage. It's what and by the way, you could sign up for our free daily market desk notes. I won't be writing them for a while because I'm headed to Tahiti Sunday. But
I love
market
your
strategist will be.
This guy knows how to live life, man.
If I look at all this, I'm like, I'm going to sea. It's just kidding. But that's what you have to do. Once you understand how the market works, like you do, Dennis and Joel, then you can take a look at it and say, well, what strategically can we do? And we say, don't trade price, trade demand supply imbalances, because price is ephemeral and set by people, machines who don't want to own what you're trying to buy and sell. That's the problem. Okay, so you have to realize that exists at all times, and there are times when it's awesome. You can just trade all day. We've had a great momentum market. That momentum market is deteriorating. I don't know what's going to happen, but I can tell you how many choices there are in the momentum portfolio. Still, 15's not bad, but yesterday it was 4. So I don't know what's going to happen.
What's in there? Open it up.
Let's look at it this way, because this will give us probabilities. So here, the MDB is in it, right? So volatility of 5.3%. That's how much the price, if you took an average, 5-day average, has been a lot more than that. But take a 5-day average, there's a 2 out of 3 probability that if you bought it in this range in 1 to 5 days and sold it here, that you could make at least 2%. That's how we think about it. It's like, is there a probability that you can produce a reliable, predictable return? It's a different way to think about the market. We're not trying to make 100%. We're trying to make 2. 2, 2, 2, 2, 2. You do that over and over. It's very successful, right?
Base hits.
Yeah, right. Like Bill, 100% probability. Now, there's nothing's 100%. It's a number approaching that. But here's your entry range. Here's your exit range. Your time horizon is 1 to 5 days. You know it's going to move 4.5%. So if you're protecting yourself, realize It can move 4% down. You're like, oh, I just lost 4%. No, you didn't. You're after 2. Just wait for the 2. What's your entry? What's your exit? That's all you're after. And that's how you can outcompete Citadel. You can't outcompete Citadel in 400 milliseconds. They will eat you alive.
Market making only for a select few privileged participants here. Don't sit on the bid and sit on the ass. You're getting picked off. We got to do a little bit out. We got to go out a little bit further. Not short-term millisecond trading.
Precisely. And it's less stressful that way. You know, I don't sit and watch screens. Oh, no, you know, I'm not saying you don't do that.
You're sitting there and drink your cocktail in Tahiti.
Exactly. It's vastly on a boat with the crew and a chef, right? And 8 of our friends. So
I'm coming to see you in Tahiti one day. One day when I actually, you know, have a day off that isn't, you know, health related. Tim, just to sum up, so we've had you on for a few minutes. We kept you a little bit over time. We love having you, Tim. We got PCE coming in 4 minutes. So just finalize your final thoughts here for us on the overall market as we enter September.
So I will say again, index options expire today. It is a monumental event. Now, maybe it's nothing, you know, suddenly nothing happened, but it is a real thing to be aware of. And at some point, the pursuit of tenths of pennies is going to break down because it's run for a very long time here. So just be prepared. I think we're reaching a dangerous point. Now, I don't know, you know, maybe it's awesome. But I would beware here. And the cause, we're looking at NVIDIA. NVIDIA is short in big institutional portfolios. They're overweighted.
Thanks, Tim.
Good to see you guys. Thank you.
Joel, this usually does the closing, but Joel's on mute.
I was on mute. You were running with that one. You were on a roll.
I know, and you're on. I know. I love Tim. Tim is awesome.
I
can always run with Tim.
You're good. You're good.
That's Tim Quast, Market Structure Edge. I did Joel's job for him. We love you, Tim. Okay, 2 minutes. PCE. Get the Brentster in here. We want to preview this thing. We want to know, is it going to be market moving? Do I have to go wide? Is this going to be the end of the bull market forever, or is this another eternal dip to buy?
I think before I get to the preview here real quick, I think that all eyes are on jobs right now. I think inflation has moved into a back burner.
Yeah.
But I think jobs is where we're at. I think next Friday is going to be the important data point when we get our monthly jobs data. For PCE, we're expecting the July reading here. For our base reading, we're expecting up 0.2%. Our core reading, we're expecting up 0.3% on a month-over-month basis. Year-over-year readings, we are expected up 2.6%, and the core reading is expected up 2.9%. We are also going to be getting personal income and personal spending at 8:30 a.m. Maybe I'll throw those in there. We're also going to be getting wholesale inventories, but I think for right now, we are focused on PCE. We got a minute here until the PCE reading.
Awesome. Nice preview here. So, yes, 1 minute here. Joel, what's the S&Ps? We're just kind of hanging out here. We're going to get a chart up there for us.
Yeah.
Good chart.
Oh, let me get my chart.
I got you.
Okay, you got it up there?
Yep.
Okay.
Good.
Yeah.
Let's go to the 1 minute.
Consolidation station ahead of PC. I did go wide. I don't want to sit there and get picked off because if it is a hot number, you could see that little flush here quickly. But I do think we still have this buy the dip mentality.
What about selling it? What about selling a rip? What about selling a rip on this one? If we get a nice pop?
Maybe. Yeah, the Caterpillar news, which we get to in a second, is obviously after the PCE is a little bit concerning here overnight. So Cat made the market go a little bit splat last night. At least it took a while, but it did eventually. But here we go. 15 seconds. Brentster going to bring in probably a nothing burger. Q001. You're probably right. It's probably a nothing burger, but you know I'm going to go wide just in case it's a something burger. Here we go.
We're moving. We're tight. We're tight. We're tight. We're tight.
Waiting for the data here. We do have core PCE month over month right in line, up 0.3%. The year over year core number also right in line at up 2.9%. In line across the board. The base readings both in line, up 0.2% month over month and up 2.6% year over year. Personal income and spending for July. Personal income up 0.4%. Right in line. Spending up 0.5%, also in line. Futures did move a little bit higher here, though, on the data.
This is a nothing burger of nothing burger rally. When it's in line, you can see a little pop here, a little pop in the
Yeah.
futures.
Yep.
You know, it's like not hot. So, okay, green
Uh-huh.
light, go.
Not
Let's
cold.
get this September rate cut in here. But, they looking at the PC. It's one data point. They're already going. Spoiler alert.
point.
This
they're
is
already
not
cutting the
changing
number.
anything. This isn't
Nope.
changing anything.
Not changing
Nope.
anything.
Nope.
But, it gives us more like, yeah, we're going for sure here. Let's rally these stocks. So we got a little pop.
We did. There was no really knee-jerk reaction down. We were steady. I'm just watching the trade here. We're getting back mid-range on the session. I just think I don't know. I just think that was a rally.
Are we in a fade trade market, Mr. Elconin?
Yeah,
Maybe
that
we're in a
was
fade
yeah.
trade market right now.
It
was
was
working last night, and there's so many examples of the fade trade last night from earnings. Let's go into earnings for a little bit. Caterpillar news is tariffs concerns here again, and that's bringing it down. But I want to do a few of these earnings reports from last night because the fade trade was working something fierce last night. Let's start with Dell, which was the most interesting report of the night. Still long in the long-term portfolio. Still like the company. The earnings were not that great. 245 versus 255 was a miss. And then, 232 versus 231 was a beat. 29.77 versus 29.1. So they'd be on top, be on the bottom. They raised 2026 EPS, but a little light on Q3 guidance with 245 versus 255, but still supposed to make 940 to 955 a share. So you're talking about a pretty, 12, 13 times earnings here on Dell. So it's definitely a cheaper AI play, even though it's a derivative of an AI play, obviously with the servers. Last night, if you can go to your slower chart there, I don't know if you can zoom in a little bit more there. It was all over the place. So we were watching and trading this live in the STN room, and Dell originally spiked up to 139. This is all in the first milliseconds. Well, seconds, because I could actually process it, so it wasn't milliseconds. Then it came all the way down to 132. Then it went up to 140, and then it came all the way back down and puked. So there was bang, ba-dang, ba-dang, and then it decided to go down. That was the price action. It was all over the place. So the algos who bought that on the headlines, we've been saying how poor, not you, Citadel, not you, Virtu, you do your algorithmic market making very well as per Tim Quast. But these algorithms that are trading these earnings reports, some of them have no clue what they're doing whatsoever. They are all over the place. So some algo bought that thing up to 142 last night on that report. Instant loser. And then it popped again, and they probably put more on. Instant loser again. Stocks obviously settled down 125, getting towards the expected move, which I believe was 9 points. So you're getting down towards that expected move just about now.
Wow. You talk about the 135.05 close and then 9 points. That takes you to 143. Pre-market or after hours high 143.20, Dennis. 143.20. So the expected move worked on the upside. Downside, you haven't quite. 125 just hanging out here. But it's just not moving away from here. So I'm thinking you still got a little bit more work to do on the downside. You've taken out a lot of different support. I
don't know if there's a hurry to get in here.
Yeah,
and we got September coming. I don't know if we need to hurry to get in here. And you were making a good point looking at the SMCI chart, and that never bounced. So they missed. Obviously, it's brother-in-law here, although the accounting's a little bit different over at SMCI. But it's never really bounced. It was like the dip, and it tried to bounce a couple days, and it's been the steady leak. And we know when you've disappointed, the guidance is somewhat disappointing here, that they haven't just jumped into buy right away. So I don't know if we need to hurry into here. Certain stocks, yes, when they're popping, when they're dropping on simply too high of a bar, those dips have been bought. But the ones that are lowering guides, those dips haven't been bought as quickly. So I think I'm, at this point, not adding to it.
And they HP Inc. Got faded a little bit yesterday. That was wild off the open. So
yeah, and remember, HPQ and Dow don't trade as much together as they used to because server business AI and HPQ isn't there. So I mean, it's you think about the PC business. Yes, they both have a big PC business, but Dow trades more on its server business. So it's more linked to SMCI now than it's HPQ.
Yep. Data center. Who else falls in that?
Well, and just talking about the gyrations here last night. We had a lot of examples of this where stocks were going one direction. The gap might be actually the best example of the fade trade just working here. So Gap last night reports earnings. Going to give you those numbers here: 57 versus 55, and 3.73 billion in line. So it's a beat on the bottom line, in line top. The guidance a little bit light. Q3 they're looking at 3.85 to 3.89. Analyst estimates at 3.91. So they punish it. The algos say, "Oh, that's light guidance. We better just hammer the crap out of this thing." They knocked it down last night to the low 19s. How low did we get, Mr. Elconin?
1880.
1880. 1880. That was down there for about a minute, and then they started buying it back, and they started buying it back, and they started buying it back, and they haven't stopped buying it back, and it's now up at 2244. So they knocked the stock down 15% last night. Now it's up 3. Fade trade working again. This is what your job as a trader is to do, is identify patterns. These earnings, chasing on the initial earnings move has been a mistake in a lot of cases here. Definitely the case with Gap last night. Now, some like MongoDB are the Gap and go, so they're not always 100%. But what we saw last night, a lot of fake outs.
Yesterday's high. We'll see if that comes into play. Actually, the last two highs are between 2246 and 2274. The bullet, that's the recent high of the rebound. So let's see. Look at that. You have to respect the resistance. Two highs in the same area for the Gap. And did they say something about tariffs? Did you already? It's kind of still.
They talked about tariffs briefly in their report. They said maybe this is why they're giving them a pass. Oh, I don't have it in front of me, but they did talk. Gap CEO tariff was, there are things that you can't control, was a comment from the CEO. So it's hitting their margins a little bit. So they're just dealing with it. So, I mean, they're dealing with it in a pretty good way. Didn't lower sales guidance too much here. The earnings were, okay. So I think that's why the initial algo said, oh, this isn't great. But you know what? They've had some tariff issues and that. So the market's giving them a pass. Gap bounces right back up. Funny where it bounces too, Joel. Like, what'd you say the low was?
1880.
And 1868, the low of the entire move. So it's just, you got to look at those daily charts there too, and just look back away, because it bounced right at your old support level from late July. Those numbers, your Harlan Pyan. Harlan, where's Harlan Pyan?
I don't know. Harlan.
He was one of our first regular guests on pre-market prep back in 2013, 2014. And what he would say, Harlan Pyan would be like, well, he always said, sell your peanuts while the circus is in town. That's what he was famous for saying. But he always say, when they bring up the chart, look at what level jumps out at you, what number jumps out at you right away. If it doesn't jump out right away, move on. You bring up that 90-day, you're like, oh, that 1868 low there, that just jumps out like a sore thumb. That's where it goes. Keep it simple, folks.
I remembered who the first ever guest was on pre-market.
We had this a little while ago, and I always forget.
Right, and Brentster helped me. Rich, and I haven't looked at him. I think he's still in the business. I'll try to track him down.
Who was the first ever?
His name was Rich Tulo.
Oh yeah.
Yeah.
Was he an analyst with? Was he an analyst?
Yeah, he was. I think he was with. Was he with Miller Tabak? I don't even know if it goes back, but I'll try and drum him up. What's up, Bradster?
I was gonna say like Albert Freed. Was it Albert Freed?
Yeah, that's.
I think you're right. That sounds right. Holy, you're a good master.
Yep.
Let's work in those news desks all those years. You get to know those analysts there. They want Marvell. Marvell is a disaster. Have that on the long-term account. It probably shouldn't be in there anymore because they just always perennially disappoint. We actually talked about this in the STN room. We're like, this stock always disappoints. They were buying it ahead of the report. So they were buying it up, and I was like, I don't know if I'd be doing that because Marvell's notorious for just disappointing the street. Well, not to disappoint, they did disappoint. 67 cents versus 66, 2 billion versus 2.01 billion. So a slight miss on sales, a slight beat on the guidance, or a slight beat on the earnings. The guidance Q3, 69 to 72 versus 72, 1.95 billion versus 2.16. They widened it. They widened their guidance. They didn't raise it. They didn't really lower it. They just kind of widened it. So, you know what, though? The market absolutely hates Marvell. It's right in the category of just hated for every reason whatsoever, even though, the company isn't doing that bad. They're punishing this. They just cannot find a bid. Stock continues to leak here, Joel. I don't know if there's any hope for Marvell here or what.
I mean, it's not far off the pre-market low. I'm looking at the dailies here, and people were interested in this in June in the 61 handle. That's still $5 away. I don't have one other low, intermediate low, 64.81, and you haven't hit that in the pre-market. So I would expect this is over what the option makers had priced in on this one. So once it gets to those points, if those points don't hold, you get like what you had in MongoDB. So Marvell, in the middle of no man's land.
Autodesk going the opposite way here, and
Yeah,
it
I
is
saw that.
ripping on earnings. I'll give you those numbers here right now. ADSK reported last night. Oh, there's a lot of numbers to chew on here. 262 versus 245, 1.76 billion versus 1.72 billion. So that's a beat on the top. That's a beat on the bottom. They raise guidance ever so slightly, but it's good enough in this market. You got to put raise guidance in, so algos, so you corporate execs for the algos, you want to put raise guidance in your actual headline, and you do that, it's good. They raise guidance 950 from 950 to 973 up to 980 to 998. So that's a pretty good raise. It's like 30-40 cent raise, which equals an 11% move higher here. But if we take our Harlan Pie in levels and just kind of like look at where we might run into resistance, this whole 320 area it's trading at right now looks a little bit resistive, and even going a little bit farther to October, actually November of 2024, we hit 326.
Yeah.
So I would say that's major super duper 10-star resistance.
Yeah,
so
I
using
agree.
my Joel Elconin levels method.
Yeah, I mean, immediately I look at 320 because there was 3 highs in that area. You mentioned another high. So if it's gonna be a MongoDB, then it's gonna be a MongoDB, but they're gonna have to do it without me. Keep it out trading at the highs of the pre-market session. I like that 326 number that Dennis gave you. With that rally is that we just had off the PC number. Leaking. You feel the offers
Leaky?
out there. Feel the
Yeah.
offers out here. I think we're going to have, down 20 handles, not a great call or anything, but I think the Bulls going to have a little tougher time too. And also, CC mentioned last week, longer term resistance, 6,500 in the S&P, 650 in the SPY. Usually you get to those landmark numbers. It takes a while to establish a bid here, but so far the pop off the PCE was faded ever so slightly.
Going back into our earnings reports here, there was a lot last night. Like we kind of like.
Let's do a good one. You're giving me a bad one. Oh no,
I gave you a couple good ones. Alta was good. We could just fly through. You can pick the next one. We got Webull was good for a few seconds and then it went down. I kind of want to do Webull. It's like just, it's de-SPACed and it's got these reports here now. And obviously it was the $80 stock back at the beginning of the year and it's $14. And we played this from $10 a bazillion times back in June. Obviously should have kept playing it and holding some of it here, but Webull did report and they reported pretty good numbers here as well. They reported, they barely make money here, but actually, do they make money? I can't even find the numbers here. What the hell? I got to go look further here. Do you have the numbers, Joel? Let me
take a look. Weebles wobble, but they don't fall down. I hate the chart.
Customer assets were up.
Yeah, I don't see the earnings.
EPS was 0.03, so they made 3 cents opposed to only make 0 cents. Sales were 131 million versus 89 million. So they actually beat on the top, beat on the bottom here. The stock popped initially, but has leaked back down here. It's doing some work in here in the 14s. I mean, the ultimate support is 1050 down there, but I don't think I have any chance of getting there anytime soon. I don't know what to say about it. It's kind of in the middle of nowhere here at 14.5.
I just wish it wouldn't have traded up to like $80 or whatever, 79.56, because
so dumb.
Yeah, it just makes
it's traded with a valuation more than Robinhood at that point in time. I think it was. I think at that valuation, was that, can we confirm that? I believe at the current time, not Robinhood's current valuation, but at the time when it traded up there to over $80, that Webull was trading with a valuation more than Robinhood. That's called pure stupidity. Pure stupidity. You got to do like some comparison. Even think about real estate. You look at the houses on the street. Well, this house is 10 times the size of this one. Shouldn't be trading for more than that one. That's what the Webull and Robinhood comparison was back then. It was absolutely insane when Webull went from like $15 to $80. But that was, just Algo's gone wild and retail going nuts. And they're like, yeah, Webull, yay. We didn't know how many shares were outstanding. I don't know. You know what? That was crazy. You're never getting back there again.
Oh
I said
boy.
that.
High of the move, 1564. High close of the move was the day prior at 1541. Kind of look at the ranges from yesterday. You made a lower high, so I'd say 15. If this thing can get to 15, get some get a bid, maybe get up to the high of the week. Coming back on the downside, you've had 1450. That identifies the lows from the last 4 sessions for Webull. Kind of tight.
IREN reported last night. Not a company that I follow widely here, but the volume on this thing has been crazy lately, and it has steadily climbed as well. They made 66 cents versus 14 cents. Maybe I should start looking at this company. 187 million versus 180. So it's a huge bottom line beat. And this
Dennis froze. Do we all freeze? No, just Dennis froze.
Test.
Yeah.
Mic check. You got me, Joel?
Yeah, I do.
We'll remove Dennis, or should we just feature his funny face like that, all frozen, like big in the screen?
I
No,
just
I'll
hope.
remove
I just hope his internet didn't go out because
No, he's not gonna like that.
no, he's gone.
He's gone. He was reading the IREN earnings, right?
Yep, that's correct.
Did he finish getting that? He said earnings 66 cents versus 14 cents. He said that sales beat 187 versus 186. The company also issued a press release about 30 seconds before the earnings were out last night. There was 2 press releases. The first press release said IREN expands AI cloud to a certain GPU with NVIDIA preferred partner status and additional financing secured. IREN has secured approximately 96 million in financing to support the purchase of GB300s, which is like a cooling thing for an NVIDIA chip, basically. So last night, I couldn't really tell if it was moving on the earnings or if it was moving on the NVIDIA preferred partner and funding thing. It was tough to tell.
You want to talk buzzwords here? Is engaged in data center business powering the future of Bitcoin, AI, and beyond, utilizing renewable energy.
A lot of buzzwords in there for you.
A lot of buzzwords. Boy, I wish I would have looked at that description. Stock, stock is not. I mean, it's been around since late 2021. Let's give you the appropriate trading action as we're seeing it here on pre-market prep. Pre-market high, boom, right there. Still bid 27.33. What do we do now? We go to the monthlies aren't getting anything, so we go to the weeklies. The weeklies don't give you anything. You go to the monthlies here. So what's this? What's the all-time high? 28.25, folks. That's your level. IPO, when it IPO to 21, everyone getting whole at 28.25. That's what I'm looking at. It's the only identifiable level for IREN.
I'm back. I don't even know what happened.
What happened?
I don't know. This computer just decided to stop the internet. And it was actually just StreamYard. Everything else was working on my computer. So it was really weird. Just StreamYard all of a sudden lost internet. So I just had to get out and come back in. So no snowstorm, not yet. I know it's coming though.
Dennis, you were out, but IREN Limited, data center business powering the future of Bitcoin, AI, and beyond.
And beyond.
Yes.
So they even go beyond Bitcoin and AI. No wonder the stock is so hot. Do you think when they put up these websites, they must say, hey, make sure you mention AI 100,000 times somewhere through the site? AI here, AI there, AI everywhere.
And Dennis, I'm going to give you a little hint here, and we're not going to, we'll talk about it later on. But the last thing it says about this company is beyond utilizing renewable energy.
They got everything in there. Everything you can think about that the algos they put on this website. This company has come out of nowhere.
You just would have gotten hired by a media relations team. They might be calling you now, Dennis, after what you just said. Just go on there, get AI on there, get quantum on there.
Yeah, all that stuff. You need quantum. You need more quantum on that IREN site.
Yes.
Quantum,
Yes.
like put
Yes.
quantum on there. Yeah, then the algos really get all antsy in their pantsy.
But
It is
no
true.
no nuclear because they're renewable clean energy. So
Well, there's ways to do nuclear clean. Just ask Trump. Okay. Caterpillar news from last night, which
Concerning.
we briefly covered, but we will cover it again. The Brentster broke through, but we want to talk repercussions for this too. So Caterpillar last night talks, just breaks out, warns the EPS is going to be a little bit light. Talk about tariff costs reaching $1.8 billion. So they are seriously being impacted by tariffs. Stock got the beats last night, down 15, because Caterpillar is the only company that's going to be impacted. The only one that's going to have to eat it. No, folks, there's going to be a lot of companies that are going to have to eat it. Caterpillar is the only one that's had the guts to come out and actually tell you that, hey, maybe your margins are going to get squeezed, because you want to know something? Tariffs aren't free money. What? What do you mean they're not free money? Of course they're free money. No, they're not free money. It's a tax, and somebody's got to pay the tax. It's got to be paid by one of two people: the person buying the product or the person selling the product. It's got to be paid by somebody because the tariff is there. So what Caterpillar is doing, obviously, is eating it a little bit because it's squeezing their margins. So if more companies decide that, hey, we actually want sales, we don't want our sales to go down here because our product's too expensive, we might have to eat this a little bit, margins are going to get squeezed. Caterpillar has come out and said the margins are going to get squeezed and their tariff costs may reach as much as $1.8 billion.
That's a lot of money. Yep.
Yes. That's a serious lot of money. So Caterpillar's going to make less money. They're telling you that. Stock trade down $15 last night. It's bouncing now because we buy the dip on everything. That's just what we do. Stock was at all-time highs coming into that last night. They'll probably buy it back because they're like, tariffs, it's transitory. It's just a one-time thing. We don't worry about, well, that's 3.5 years are going to be here. So it isn't transitory. I know who was saying it last night. Which Fed official? Waller? Was it Waller saying they're transitory? Yeah, transitory for 3.5 bloody years. What do you think? Trump's just going to change his mind and say, look, folks, I was wrong about tariffs. Tariffs, no tariffs, don't need, I think this is the worst thing ever. Tariffs are not the fourth best thing in the whole world here. I'm just going to, now remove all the tariffs and I'm going to go to free trade. No, he's not. The tariffs are here to stay. They're not bloody transitory. Stupidest thing ever. Stupid comment. Not transitory. Tariffs are here to stay. Margins going to get squeezed. Do the algos care? Does the market care about that much? Do we sell all our stocks? Probably not, because the market just gives a silver lining pass to everything. And they'll say, well, so the margins get squeezed, so we have a little bit of, tougher time here making money. But, people are still going to buy product. Yeah, when the company eats it, like Caterpillar's doing it. Money's got to come from somewhere.
Well, Walmart too. Remember, they got hit on their earnings here, and they're not recovering. So they said something in regards to Super X. Let's see, as long as Walmart holds above 94, but not talking to Walmart. We're talking about the cat. Kind of spotty trading here. So the pre-market low comes in at 419.42. Actually, that held up in 3 15-minute brackets, down $10. Can you get to the? I'd be more resistance. If you get a pop, S&P's run 8-10 handles, you might be able to get the bottom of yesterday's range at 432.63, and close was 434.91. Deere, not quite yet. Deere's down to 3.5. I mean, as for how the farmers are doing, I just don't know. I just don't know how they're going to be afford to, if they're getting pinched now a little bit, higher prices, they're going to.
I mean, does it roll over? The question is, does the cat roll over into XLI and all the other components in there and get into the Deere and get into, your United Rentals, CMI, Cummins? We were going through this list last night, me and the Brentster, and saying these are the ones that, Picard, Brentster, you mentioned. I mean, it's not really trading down. Deere is one that's trading down. The other ones are kind of like, meh, that's Cat's problem. Tariffs are Cat's problem. That's the market. That's how stupid the market is, folks. Tariffs are Cat's problem. That's not everything else's problem. No, it's not true. It's everybody that's selling stuff's problem. They got to figure out anybody who's importing stuff. Make in America, and then it's not. So it isn't certain companies' problems if they're U.S. based and selling all U.S. domestically. Otherwise, yes, it is. Multinational corporations, tariffs are problems.
All right, moving on. Still, do we cover is that the rest of our earnings parade here on this? Did we do a firm?
No, I think we didn't actually. Let's do a firm because that stock was the same thing. The fade trade working last night here, Joel, because initially stock traded down. Stock traded down on this report, which
Wow,
the report
way
was good. I
down.
don't know why it was trading down. Yeah, way down. 20 cents versus 10 cents, 876 million versus 837 million. And then the guidance is a little bit light. Like not light, but they widened it. So you see Q1 sales, they're in Q1, they're different than everybody else. 855 million versus to 885 million versus 860 million. So they just widened it a little bit there. You know, upper end up, lower end a little bit down. 860, it's kind of right here. So I don't know if the algos knew what to do with that, with the widening, but it did trade down. It was down how much, Joel? It was down like $3 or $4 last night.
$3 or $4, Dennis. I got a 75 print here. A
75 bucks.
Yeah.
And then they decided, no, this is a firm. And we actually talked about this one in the STN room last night here too, where we were like, the chart is beautiful. The chart going in the report. I'm not a big technical guy, but like this was in consolidation station. I'm like, this stock wants to go higher. Like it's just a matter of whether the earnings can give it the catalyst to do it. Initially did not, but then they just started buying it and buying it and buying it. Now, you know, it's off to the races here and looks great. And, you know, you get up the Kenny Glick, shout out to Kenny. You know, you get the 93, get the 95, get the 100. I mean, a firm could MongoDB right in front of us.
Yeah, did not get to the expected move on the downside. You had expect a move up $11. That would have taken you under 70 to 69. You didn't get that. Got the bounce off 75. Now you're exceeding the expected move to the upside by $2. So really want to see it hold that expected move. In fact, I think someone in the STN room was caught on something, and it came back like to the expected move area, and they use it to mitigate a loss as opposed to going on taking a profit. So 91 bucks, that's the expected move. You got to expect it to hold move higher as long as it holds 91 bucks. Up 1381 in a firm.
Okay, 2 minutes left here. Obviously, mixed signals is really kind of what today is. You got some companies doing pretty good. You got another company warning on tariffs. You have a lot. Just to clarify here, when I come on and I rant and I'm like, oh, there's Dennis all bearish here again. I haven't been bearish at all. I've been long stocks. I've been saying this market is resilient and buy the dips. I've been relentlessly saying buy the dips. I've been relentlessly long, playing all my long strategies here. Just like Tim started here. The stock market's not related to fundamentals. It's all on emotion. It's all on other things. So just because tariffs are going to squeeze margin in the second half doesn't mean I have to sell all my stocks today. Get the hell out. The pain is coming. No, I never said anything like that. You guys are putting words in my mouth. I never said anything like that. What I'm talking is you got to be cautious, like with later on. But right now we're in full bull mode. Am I ready on the sell button if all of a sudden the market starts paying attention to what's going on? Absolutely. But this market is giving us all the signals that it doesn't give a crap about if margins are getting squeezed. It doesn't give a crap if we got signals of inflation coming. It doesn't give a crap. We have lower interest rates coming. A lot of lower interest rates coming. That's bullish, folks. So there you are. I'm still scared. Even though I'm scaring you with my tariff talk, if that's scaring you out of stocks, you got to hold a little bit better if you're getting scared of a little bit of tariff talk, because you know what? The market doesn't give a crap about tariffs, but it's still fun to talk about. We're doing a show. Caterpillar's getting squeezed, making less money. We're a news company. We got to cover that stuff.
I'm not on with you and Brent on the closing print, but when you're looking at the closes and the overnight trades and stuff, and something's way up, and you're like, should I buy this one? And why not? Why not? Maybe I'll try to buy a little dip after hours. I mean, that's been working. Now today, we'll see. I mean, that has been the mantra, right? Lower opens, the bulls Friday and the week on a high, going into a 3-day weekend. What could go wrong, right? So let's see. Let's see if we can get back to unchanged here in the session. But good day. Oh, we forgot we skipped Baba. Should we do Baba up $8.50? We got to do Baba. Let's do Baba.
We'll go overtime for Baba. We'll go overtime for the Bobster. The problem is with China stocks, when you chase them, you're always punished for that. The earnings weren't that great here. 206 versus 213 is a flat out miss, and 34.57 billion versus 34.26 billion. We got to bring our charts back up here, Joel, and just show initial headline here, and they did hit BABA. So the news algo wrong again. Wrong. Basically, it's wrong almost 90% of the time, it seems like. It goes opposite that news algo because they lose a lot of money. Eventually, they're just not going to run. I do notice that too. There's less trading on the headlines now because it's so hard to figure out. So there's algos that have been getting punished with it. Some of them are backing the hell off of it as well. But BABA moving up. It's a good move here for BABA, but I've seen this game before where BABA pops $7, $8, $10 on earnings and then starts to leak it away. It's like China stocks are just eternally hated, much like MRVL. Do I think BABA is cheap? Yes. Do I think BABA should be higher fundamentally? Yes. Do I think the market trades on fundamentals? No. So you're getting back up here, resistance again. Hard to chase BABA because I get punished for chasing BABA every time I chase it.
132, 133. That identifies three highs back in May up here. That's another $5 away from here. Maybe psychological 130, but still getting follow through. Keep your eye on your pre-market highs. So all right,
the
folks.
AI chip too. Ronnie pointing out and correctly
yeah.
pointing out the AI chip that they announced that they were coming out to fill the NVIDIA void. They're coming out with their own AI chip. That is a catalyst as well. That's also why NVIDIA got hit a little bit here today too. So that is important news for us to cover here, which we did not cover earlier. So Alibaba trading up on that. NVIDIA is trading down. A little bit of competition, but we know what happens.
Okay, end of the month, folks. So, there's end of the month options expirations, weekly expirations, your 0T, DTs, all that fun stuff coming today. Everyone day off Monday, except for Dennis. Dennis will be doing a pre-market prep.
I have to work on Labor Day as well.
Enjoy your day off, and then on Tuesday when we come back, we'll talk to Tommy Lackey. Did a great job in the STN room last week, just like not fighting the momentum, training what's in front of them. So fun day here on pre-market prep. Thanks to Tim Quast, and that's it, folks. Have a nice weekend.